How's it going, YouTube? My name is Ari and welcome back to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 within my Vanguard brokerage account. And the question right off the bat is, who out there is having some fun in these market conditions?
You be ferocious. You be relentless. Now let's knock this out of the park.
Whoa, we were really slipping and sliding when it comes to the volatility. I mean, just the other day, we have hit some of the low lows that we have not seen since October of 2020. And all in all, we have been battling inflationary scares for some time now. Russia and Ukraine going head to head. This is just causing a ton of fear and uncertainty. And now we're getting the articles out there that are saying the S&P 500 is nearing death cross territory. And it's most important for all of us to just stay the course as long as we have a long-term investment strategy, guaranteeing you will probably fare far better off than if you shy away from investing at all. Now, in terms of my personal account, of course, we are just going right along with the market, taking a nosedive here. We actually fell by $2,188.15, leaving my account sitting at $82,870.25 on the day. However, like I said, if we are long-term value investors, now is just the opportunity for all of us to capitalize on this volatility. So in today's video, I'm going to be going over the 5 stocks that I've been doubling down on just within the past couple of days. Video you're not going to want to miss out on. Make sure you watch it through and through. Tap on that thumbs up button before we get started. It helps me grow this channel. And most importantly, if you haven't already subscribed, make your way over to doing so. I want each and every one of you on this journey with me. Now, YouTube, let's go ahead and get right to it. All right, YouTube, so I just want to get right to it in today's video by talking about the 5 dividend stocks I've been doubling down on the past couple of days here. Now, I guarantee you, if you've been following along on the Blue Lion Finance journey, you are familiar with all of these investments. However, I'm sharing all of these with you because, well, this whole channel is about my personal journey, but moreover, here to show you that it's just about consistency and patience and doubling down on what works. So now this all leads me to the very first stock I want to talk about today, which is Bank of America, ticker symbol BAC. Bank of America is America's second largest bank. It was founded back in 1998 as we know it today, with a little over $2.4 trillion in assets, more than 4,300 branches, and just over 17,000 ATMs across the United States. They have certainly come a heck of a long way, competing now only really with JP Morgan, and with a market cap around $314 billion, an insanely healthy balance sheet after a rocky couple of years. And with their PE ratio sitting around 10%, I personally cannot pass up the opportunity to really begin to hone in on my position with Bank of America. Now, with the Federal Reserve that was due to begin to hike interest rates, Bank of America, along with all the other banks out there, were poised to do very well in 2022. However, amidst all of this volatility, and Bank of America not directly tied to Russia, but indirectly through banks in the EU and other financial institutions that are impacted, well, Bank of America is certainly experiencing a lot of this volatility. Their stock fell from around $49 a share all the way down to $39 a share. That is a 20% change, and in my opinion, a fantastic opportunity to pick up Bank of America while it's trading for these valuations. And looking into Bank of America's future, analysts only foresee a rebound with their stock coming right back up to $51.90 at a median stock share price and a high stock share price at $66 per share. So this is exactly why I went ahead to double down on my Bank of America position, picking up 5 more shares worth of Bank of America to add to my position at an average buy-in price of $39.80, bringing my total share count of Bank of America up to 25 shares. Now, ultimately, I get to kick back and collect on Bank of America's dividend, which I consider to be very reliable. It's coming in at a current dividend yield of 2.05%. And next up, after fulfilling my goal of hitting 100 total shares of Realty Income, I did not pick up more shares of Realty Income. I went ahead to double down on the next REIT of choice, which is STAG Industrial, ticker symbol STAG. STAG Industrial is, of course, another REIT. It was founded back in 2010, so quite a young REIT. However, it has just had explosive growth over the years, and since their founding, they've now amassed a portfolio of over 500 properties spanning across the United States. Now, primarily, they're focused on single-tenant industrial properties properties like warehouses and distribution centers, and with 40% of their entire portfolio dedicated to businesses dealing with e-commerce fulfillment like Amazon and FedEx, we are talking about a business that is set to continue to explode well into the future, as we are only now really tapping into the e-commerce era, if you will. Their current market cap is sitting just above $7 billion. Their current PE ratio at 34.33%, which I think could in fact come down. However, their stock did fall from $48 a share down to around $39 a share. That's an 18.75% change, and in my opinion, a great opportunity to buy STAG Industrial on a bit of a discount here, especially as analysts only foresee their stock rebounding and soaring right past some of their record highs, coming back up to a median stock share price at $47 per share and a high stock share price sitting at $55 per share. Now, until it gets there, we're collecting on STAG Industrial's monthly paying dividend, with a current dividend yield sitting at 3.65%. Now, in my opinion, STAG Industrial is going to have one heck of a future. So again, I'm just going to continue to build out my position. Yesterday morning, I picked up one more share worth of STAG Industrial, $39.02, bringing my total share count of STAG up to 24 total shares. I'm only going to continue to dollar cost average my way into this position, building it out until 100 total shares worth of STAG. Moving to the third dividend stock that I've been scooping up as the market has been incredibly volatile, we are talking about the world's most beloved fast food chain, and a company that I just posted in my last video because it is one to watch for the month of March. If you want to catch that video, I'll post a link just above here. However, we are talking about McDonald's, ticker symbol MCD. McDonald's doesn't need any sort of introduction. However, I always think it's worth mentioning the moat that McDonald's built for itself as they established an empire with over 38,000 locations operating in over 100 countries. Now, since their founding in 1955, they have seriously become the epitome of what successful franchising should look like. As of right now, they're sitting at a market capitalization of $167 billion. And despite all of the market conditions year after year, McDonald's only continues to deliver through on exceptional growth. Now, as of recently, McDonald's has been under fire because they not only faced Russian retaliation as they're an icon of capitalism, but McDonald's was also pressed here at home from boycotting pressure if they didn't close down shop in Russia, to which they did, closing down 850 locations, joining a multitude of other corporations looking to take a stand against Putin and this Russian aggression. However, they did not make way for their stock to fall, falling from $270 a share all the way down to $224 a share, about a 17% change. And in my opinion, with such a quality company like McDonald's, this is the perfect opportunity for the long-term value investors. With their current PE ratio sitting around 22%, I went ahead to pick up one more share worth of McDonald's for $224.71, bringing my total share count at McDonald's to 3 total shares. Now, I'm only going to continue to build out my McDonald's position, especially as analysts only foresee a rebound in sight and, of course, continued growth, coming back up to a median stock share price of $283 a share and a high stock share price at $306 per share. Now, that dividend yield of theirs is at 2.29%, and they've been paying it out for 46 consecutive years, increasing it year over year, making McDonald's a dividend aristocrat and a rock-solid dividend investment. Now, right in line with the world's largest fast food chain, we have the world's largest coffee house chain. We are talking about Starbucks, ticker symbol SBUX. Very similarly to McDonald's, Starbucks is one of those companies that has just become an iconic play that you can invest in and expect a great return on an investment. Since their founding, they have been amassing their own little empire, building up a portfolio of over 33,000 locations operating in 80 countries, and they are still growing, no signs of slowing down. Just as long as all of you continue to sip on their mocha choca, double frappe, extra grande lattes, I think they're going to do just fine, especially if their history is any indication for us as investors, as they continue to deliver through on year-over-year net income growth. Their current PE ratio is hovering around 22%. However, amidst all of this volatility, and just like McDonald's, they too face boycotting pressures. They had to close down 130 locations within Russia. That stock of theirs did in fact fall. It fell from around $116 per share down to around $84 per share. That is presenting a 27% change and a massive opportunity for all of us long-term value investors to also pick up Starbucks while it is discounted. That is exactly what I did just the other day, picking up 2 more shares worth of Starbucks for an average buy-in price of $84.96, bringing my total share count of Starbucks up to 12 total shares. Only going to continue to build out this position as well. Now, analysts' expectations are coming in with a median stock share price at $115 per share and a high stock share price of upwards at $136 per share. And until it reaches those prices, we're just here to collect on Starbucks' dividend as well, with a current dividend yield at 2.32%. And last but not least, I went ahead to just double down on my strategy, which is investing into the entire market, a fail-safe strategy, if you will. I did so by investing my way into Vanguard's Total Stock Market Index Fund, ticker symbol VTI. Now, with this particular fund, we are talking about investing into over 4,000 companies ranging from small, mid, and large caps, both with value and growth plays within it. Now, ultimately, with every single bout of volatility, I'm just buying a share or two of VTI, which is exactly what I did the other day, picking up one more share for $212.32, bringing my total share count up to 38 total shares worth of VTI. Now, YouTube, that is it between Bank of America, STAG Industrial, McDonald's, Starbucks, and the entire market through Vanguard's Total Stock Market Index Fund. Those are the 5 investments that I doubled down on so far this week, just taking advantage of all of this volatility. I spent a whopping $845.11 thus far, and I'm only looking to continue to double down on all of these positions, especially if I can continue to pick them up at such valuations. If you yourself have liked what you heard, you learned something new, drop all those comments below. I'd certainly love to read through them. Of course, let me know what you have been buying as well, and understand that I'm not a financial advisor, so after my videos, just do your own due diligence prior to making any investment decisions. However, go ahead, tap on that thumbs up button and help me grow this channel. If you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, I'll see you all in the next video.